Welcome to Bears in Exile. Today is April 25th. We're going to take a look at the Dow, the SPX, TNA, and the VIX. We're not going to have very much to add to the charts today. The market seems to be going sideways as it awaits direction from the Fed on Wednesday. Therefore, earnings announcements may be very muted or not have much of an effect on the market. Looking at the Dow, we do have a red bar. However, the fastest short-term moving average has not ticked down. We do not have a clear warning sign as of yet. Everything else is totally bullish. Everything is pointed up. All the other time frames are showing us going into a flat line as we wait out news. Flat line, well, partial flat line, flat line, flat line. The long-term moving averages are in effect in all time frames. Bulls definitely have the advantage still. SPX is exactly the same thing as the Dow. Exactly the same, no downtick. Long-term pointing up, short-term pointing up. Partial flat line. Partial flat line. Complete flat line. Complete flat line. The 60-minute was the partial flat line. Again, bulls have the upper hand. TNA, stronger than the Dow, stronger than the S&P, no red, more separation of the short-term moving averages. Everything is pointed up, and just like the S&P and the Dow, flat line, flat line, and on the 15-minute, double flat line. So this one is actually more vulnerable in the shortest term to have a minor pullback depending on whatever news decides to hit tomorrow. But overall, very bullish. Extremely bullish, actually. On the daily, it's stronger than the Dow and the S&P. And looking at the VIX did gap up some today. The long-term moving averages are still bearish. And it did gap up enough to get an uptick. Now, whether or not this means it needs to compress further or even come up for a test is not yet known. This little candle is tiny. It doesn't really say much of anything. All that it tells me is that this was really low and people said, oh, that's really low. Might as well buy some VIX. But that's my interpretation. On the 60-minute, you can see that the gap up did bring the short-term moving averages up to test the long-term moving averages and did not really get in there. Had a couple stray moving averages run into it, and it is closed inside of the bar. That is not bullish in my opinion. I actually think that that's pretty weak. You can see the other times when it comes into the bar and does not pierce through it, it typically will rebound as the bar pushes it away. On the 30-minute, it did manage to get all the way through the bar. The bar is not. The bar is compressing, but it's not flatlined or flipping. So this does provide some strength to try to drag it back down on the 30-minute. And on the 15-minute, just like many of the other indexes, we have a flat line, actually a double flat line, as the market tries to figure out what it's going to do. Now these it's kind of interesting because we have two flat lines here, and they are not on top of one another. So what does that mean? It doesn't mean much of anything. It means that it can still go up or down very rapidly. and we are going to be dominated by the news cycle, especially Wednesday. And there you have it. Not much to add, and we'll be watching the news, waiting for something to happen. And as soon as we have an indication on the charts as to how this is going to turn, the strength of the turn, and if a new trend or a continuation of the existing trend is confirmed, we'll be the first to let you know. Stay tuned. As always, this video and these charts are for entertainment, educational, and consumption of time purposes only. All investing decisions are your own. Please stop by Bears in Exile. We have a forum and lots of other features. Come by and check us out.